Good afternoon and happy Tuesday, ladies and gentlemen. Welcome to
Report
another
you.
episode of Company in Focus. I'm Cal Garcia and I will be hosting today's session. We are joined today by the esteemed management of GT Capital Holdings Inc. As a brief background, GTCAP is among the Philippines' largest conglomerates, with diverse business interests in banking, automotive, property, insurance, and infrastructure. Its key operating subsidiaries and affiliates include Metropolitan Bank and Trust, Federal Land Inc., Toyota Motor Philippines, AXA Philippines, and Metro Pacific Investments Corp. To provide us with more details on GTCAP's growth prospects, future plans, and strategies, we will be joined by Mr. George S. Oitioko Jr., SVP and Chief Financial Officer and Treasurer, Mr. Jose B. Crisol Jr., SVP and Head of Investor Relations, Strategic Planning, and Corporate Communications, and Ms. Reina P. Manonog, SVP and Head of Accounting and Financial Control Department and Controller, as our distinguished speakers. But before we proceed with today's session, I would like to run through quickly on some housekeeping matters. While all attendees will be muted during the presentation, you are more than welcome and encouraged to type in your questions in the chat box. We will proceed with a live Q&A after the presentation from our speakers. Now, with that behind us, let me pass the virtual floor to Sir Joey Crisol. All right, Sir
Thank,
Joey, the floor
thank
is
you,
all
Kyle. Thank you
yours.
very much for the introductions. And thank you very much also to First Metro Securities Brokerage Corporation for hosting us this afternoon. This is an initiative of FSMBC that we look forward to because it allows us to reach our retail audience. And with that, of course, our very special thanks goes out to the audience. Thank you for your continued interest in GT Capital. So let me start with some general statements about GT Capital, and then I'll turn the floor over to GB later, and then after which we can go straight to the Q&A. So our key messages for the first quarter: we were off to a good start. Core net income significantly grew by 27%. It's worth noting that in first quarter 2024, which was last year, it was already a record-setting growth rate that we had. And in spite of that, we were still able to beat that performance. As a matter of fact, during the first quarter, we were one of the best performing among our peer conglomerates. So in terms, and those were mostly driven by Metrobank, which the net income of which grew by 2% to 12.3 billion. Metro Pacific likewise recorded a core net income of 6.6 billion, up 18%. And TMP, record retail vehicle sales of 55,513, up almost 12%. And a record net income of 6.3 billion, representing a 57% increase. Now, when it comes to our strategic direction, we are on the right path in as much as our operating companies, such as Metrobank, is on track to achieve its medium-term target of 15% return on equity and 15% CET1. We will, time allowing, we can discuss this in detail as we go along. Federal Land strategic focus to go into horizontal development, lot sales outside Metro Manila has been on track also, specifically River Park North and the Binyan residential lots. Also, we will explain this in detail later on. For TMP, it has clearly maintained its market dominance across all the segments in the auto industry, and we will present to you more details later on. Now, given all of those, and also the current uncertainty in both the geopolitical and economic fronts, we expect a more measured growth for the rest of the year. So those are our key messages, and with that, I turn the virtual floor over to GB.
Thank you, Joey. So maybe just a very quick snapshot of the first quarter. And for those of you who attended our first quarter briefing, this will be very familiar to you. But long and short of it, we had a fantastic first quarter with core net income at 8.7 billion, approximately 27% up compared to the previous year. For our reported net income, we're at 9.14, up 29% on the account of one-off items and one-off gains, largely coming from Metro Pacific as part of the sale of one of their subsidiaries or affiliates, one of their investments. So very good quarter, and as Joey had mentioned, largely led by the performance of our three biggest business units at Metrobank, Toyota, and the performance of Metro Pacific as a whole. So had a very good first quarter, and just being mindful that you know the rest of the year will most likely be a little bit more measured compared to the first quarter, but we are still encouraged and positive and optimistic that we will have a pretty decent year ahead of us this year. Okay. So this table you see here, basically the split, banking and auto still accounting for approximately 82%, but you'll see here the push in the larger contribution coming from auto and infrastructure, as those two businesses actually grew very, very strongly in the first quarter of 2025. Again, we'll see how the rest of the year progresses, but we don't expect that this pie chart is going to change too significantly compared to the contribution of the different businesses in the past. Okay. Next slide. That's our performance in a nutshell, and we really purposely wanted to keep it a little bit short to open the floor to questions. I'm sure that a lot of you have questions about the company, and we're here to answer any questions that you might have.
All right. Thank you, Sir George. That was a short and sweet presentation. While questions are still coming from our live audience right now, we actually have a lot of questions sent in advance from several of our clients as well as of our signups here. No? So I think to start off with the question, so first, focusing more on the Toyota segment right now. So first is, there are a lot of competition, especially from China, right? So right now, how is TMP viewing and responding to the increasing competition in the automotive sector?
Okay, that's a very, very good question. And I think these numbers that you see here basically show the first 4 months of the year, and you will see basically that we have held on to and in fact have grown our position as number one. And this is based on the CAMPI figures that have been reported by the Automotive Manufacturers Association. Toyota we do enjoy a very strong position as the market leader. But it also means that we don't rest on our laurels, and we are very conscious of the fact that there are a number of entrants coming into the market that are offering, I guess you could say, very compelling and very interesting types of products at certain price points. We have been fortunate enough that because of our strength and the strength and the breadth of our product line, we have been able to maintain our market position, and you can see that with the numbers we grew in the first quarter faster than the industry as a whole, which means that we're taking market share from our competitors. We do welcome the entry of new players in the market. There's nothing like a healthy competition in an automotive market to really spur growth and further investments in this particular sector, right? But again, it also doesn't mean that we intend to leave market for them. It's just that it's a market that we think is going to grow much faster in the future, given the stage of development of our economy. And I think we intend to benefit from that, despite the competition. Long and short of it, there's enough room for multiple players to be able to try to present their offerings to the market and let the consumer choose.
Regarding consumer choice, I would just like to add or re-emphasize what Toyota has been doing in terms of electrification, and that is the multipath approach. Currently, it is pushing for HEVs in as much as the infrastructure for pure battery electric vehicles is still not yet present. But as and when that comes, then Toyota will definitely be able to pivot successfully to that particular kind of vehicle. As you can see, it has already laid out its targets for BEVs. So right now, to reiterate, it is still HEV given the current market situation.
All right, sir. Thank you, Sir George and Sir Joe. All right. Another question sent in advance, actually. Can you give comments on the Vios hybrid rumors? And then, is there any indicative timeline and pricing on this? I think, yeah, it's still a rumor, but some interest already.
Not just for the Vios, but for any model launch, we do not preempt Toyota Motor Philippines itself. We are advised close to the launch date, and we defer to them. So at this point, we do not have any formal information regarding that.
Yeah, it wouldn't be appropriate for us to comment on specifically on model launches, but I think as we have shown to our investors in the past that there is a market for the kind of vehicles that we offer, and there is a market for hybrid electric vehicles in the country. And I think, like we've said in the past, we do have the broadest range of vehicles available across different price points, and we do have the capability to be able to expand this. I would just say, be on the lookout. We want to give customers the kind of products that they're looking for and they're asking for, and it's a factor that I think Toyota will always be responsive towards.
Towards that end, TMP has time and again proven that it has its ears close to the ground. If it launches a model in a particular segment, chances are it will be the dominant offering in that particular segment.
Definitely, definitely. Yeah. Thank you, Sir Joey, again, Sir GB. On top of that, since federal land seems to have very limited projects, according to one of our questions here, what's your midterm plan? Do you have any plans in terms of launches, whether in the provinces or in Metro Manila?
So, as I mentioned during my opening statement, the focus now is in Cavite. That's where the flagship projects of federal land would be. You can see in this vicinity map how strategic it is. It's now branded as River Park. And once all these infrastructure projects are completed, travel time will be greatly reduced, probably to less than an hour, maybe 30 to 40 minutes.
Mhm.
So that is the focus now. It's quite huge, as you can see again in this slide. River Park alone accounts for close to 600 hectares. So that's where the efforts are being focused on right now.
Thank you, Sir Joey. Actually, one of our clients seem to be interested in buying lots in Cavite. They asked what locators will be built in River Park aside from the SM General Trias.
Well, there are existing and ongoing projects already, aside from SM General Trias. One is the Uniqlo Logistics Facility. This is a build-to-suit construction specifically for Uniqlo. You can see the details on the left-hand side of the slide. And GB and I were fortunate to have visited the site just a few weeks ago. And aside from that, there are also other smaller retail establishments that have been put up. And of course, the existing, even prior to River Park, are there as well. So it's not just SM. Of course, there are the residential lots such as Yume. So all in all, it's really a master plan community, mixed use, your live, work, play township approach.
In the first quarter of this year, a big chunk of the sales came from the sale of commercial lots that were sold in the River Park area. So, so it's a good indication that there are independent, I guess, developers or lot property owners that have a view of taking positions, I guess, in the commercial segment of the development that's there. Um, as Joey mentioned, we went to see the site just a few weeks ago, and it took us less than 30 minutes to get there from Makati, going through Macapagal Boulevard. So when the two exits are opened along Calas, that should actually make it even easier to get there, whether you take Macapagal or you take SLEX to get to the location.
Thank you, Sir Joey and Sir GB. Yes, if you have any clients here looking to see if this is a good site, maybe you could check it out and reserve your own lot. So moving towards the GT Capital as a whole, a lot of our clients are asking also to Sir Joey and Miss Rain. I They want to learn how is the company's financial strength, and just to compile some questions here also. Do you have any plans of looking to invest in hospitality or power or any other types of sector?
Rain, maybe on the
Yeah,
financial aspect.
on the financial strength. So GTCAP has demonstrated several key financial strengths, primarily stemming from its portfolio of market-leading businesses and prudent financial management. So I'll mention three. First is GTCAP has strong core businesses, and these sectors are very vital to the Philippine economy. So that includes banking and insurance through Metrobank and AXA, automotive through Toyota Motor Philippines, infrastructure through MPIC, and property development through Fedland. Second, number two, GTCAP has strong profitability and growth. GTCAP has track record 27% growth year-on-year in Q1 2025. Of course, this was driven by our healthy contributions from MBT, MPIC, and Toyota. But again, as mentioned, we expect for the year a more measured economic growth. And last but not the least, we have a strong balance sheet. GTCAP, along with Metrobank, has strong capitalization. This provides resilience against economic uncertainties. We also have manageable debt levels. In fact, in the past 3 years, we have paid close to 20 billion in debt. Our debt level is now at 59, gross debt level, the parent is at 59 billion, and our net DE is at 0.33. And lastly, we have very healthy we maintain a healthy level of cash. We're very healthy, sufficient enough for our operations and our interest payments and our future plans and projects.
GB, want to take the question on the new sectors?
Yeah, as far as the new sectors are concerned, I think we've stated in the past that what we're looking for is to further diversify the portfolio and to look at sectors that can basically contribute to growth. It wouldn't be right for me to basically say specifically that, oh, we want to focus on this sector, we want to focus on that sector or the right. No, there are some that appear to rise to the top, primarily because we are looking for investments in sectors that can basically contribute to the overall performance of the company, but also sectors that we think are relatively fragmented, but that can contribute or have inherently pretty good margins and pretty good returns. No? And right now, we are still evaluating which sectors to get into, which investments to make. But anybody who has done any kind of M&A activity in the past will know that these things don't come overnight. You do have to spend the time to really look for them before you actually make an investment.
Definitely. Thank you so much for that, Ms. Rain and Sir GB. So in line with the GTCAP's financial trend, I think our stockholders are also curious. What is the dividend policy of GTCAP, and do you have plans to increase payout in the future?
Right now we declare a regular cash dividend of 6 pesos per share every year. This year, just the same as last year, we declared a 2 peso special cash dividend. We do have, I guess we do have ambitions to use capital for other things in the near future. But I guess the best way to think about it is that when we think that there's an opportunity for us to be able to declare dividends, then we'll do so. No, if we think that the timing is right. Priority will always be our own internal capex requirements, as well as any investments in any new investments that might be that we might want to make that we're evaluating before we actually think about uh, I guess topping up the regular cash dividend, so to speak.
Just to refresh memories, the 6 peso per share dividend is already a doubling the previous payout, which was 3 pesos per share.
Got this. Thank you, Sir Joey and Sir GB. So moving back to Toyota Motor Philippines, a lot of our clients are asking also. Can you discuss with us what is the sales split between NCR and the provinces? Have there been any changes in trends?
The provinces are accounting for a larger percentage of sales today. And you see here from the chart, it's up to about 64% compared to Metro Manila. So that is a good indication. You see here, just as recent as 2015, 2016, okay, it's 10 years ago, but traditionally Metro Manila had always accounted for a larger percentage of total sales until 2017, 2018, when we saw a spike in sales in the provinces. We think that this is good and this is healthy. If you take a look at the GDP growth in the provinces, this performance actually reflects the fact that there are provinces outside Metro Manila that are experiencing higher growth from a GDP perspective compared to the national average and compared to NCR. It's really led by Central Visayas, Davao, and Northern Mindanao. So we think that this augurs well for the sector as a whole. It also gives us some confidence that Toyota will continue to do well in the future as this economy continues to grow.
Which is also why, in terms of the distribution platform, it is skewed more towards the provinces, as you saw in the previous slide, wherein there are more dealers outside Metro Manila. So that is in response to the strong demand that we have been seeing in areas outside the metropolis.
Yeah, thank you, Sir Joey and Sir GB. Again, to our audience, you may continue typing in your questions in the chat box, and we will address as many questions as possible, given the limited time. So on top of our question regarding TMP, can you give us the total sales split between electrified vehicles and traditional vehicles?
We have
a slide on that.
We have a slide on that, right?
Yep. Well, as I mentioned, wait, there you go. GB, want to talk through it?
Yeah, so you see here the numbers of electrified vehicle sales as a part of total sales. And in the first quarter, it's about 7.1%. So that is a very, very strong growth compared to where it came from before. The numbers on the lower left-hand side, you will see are the absolute units. Now, you can see the growth rates. I mean, these are astounding, right? So 100, 150, 200, 100% growth rates. And I think they are they're reflective of the fact that the market is beginning to accept a hybrid electric vehicle as an alternative to traditional combustion engine vehicles. We think that this is going to continue, and especially for a market like the Philippines, we think hybrids are really the way to go. Just because we don't have a charging infrastructure here, that's very expensive to build and maintain.
Plus, you're exempted from number coding.
Yep.
Thanks, Sir GB. Actually, our questions did one of our live questions are is actually pertaining to charging stations. Will GT Capital consider setting up EV charging stations like other competitors?
Well, I see the question coming from Michael. Michael, good to see you and good to see you joining us on this uh, on this call. Is someone Michael, someone I haven't seen in a long, long, long time. But the answer to that is that's not in our immediate plan. If and primarily because primarily at least from my perspective, um, I personally am not sure whether setting up independent charging stations actually can be profitable. It remains to be seen how that can be done profitably. Uh, so it's not in our plan. If you look at the performance of charging stations globally, even their profitability in some more advanced countries, I think is challenged. So it remains to be seen whether or not that that will work from a business perspective.
Definitely. Thank you, Sir GB. And in terms of growth plans, one of our questions here directly directly alluded to also a while ago, Sir GB. You mentioned a few months ago that the company plans to enter or invest in new industries. What is the timeline on this and where are we? Or can you share at least some snippets on the stages GTCAP is already in?
There's no specific timeline, and it's very difficult to say that by X date I must have A, B, C, D, because that actually can lead you to make very, very poor decisions in terms of pricing and the type of company that you want to acquire. Right? If that's where you make mistakes. Basically, if you set a particular deadline that I must have A, B, C, D company by this particular date, we can have an ambition, but to put a deadline to it, I think would be detrimental to ourselves and to our shareholders. Right, that's number one. What we will do, what we promise you, is that we are looking very closely at the number of sectors. We have evaluated a couple of opportunities that have come across our desk. Most of which we've actually turned down already, right? Just because they didn't meet I guess our criteria in terms of the type of sector, the kind of returns that we can get, and whether or not we are doing it with the right, I guess, a technical partner or the business partner who can really help us run that business.
Got it. Thank you, Sir GB. So one question sent in advance regarding the whole landscape right now. Are there any models imported from the US? And is PMP affected by the US tariff war? And maybe you could also talk about just the GTCAP as a whole and its subsidiaries regarding the current landscape right now.
PMP does not import any vehicle or parts for that matter from the US. Its sources of its vehicles and parts are just three: Indonesia, Thailand, and Japan. So in terms of tariffs, it is not really affected by the current situation between the US and China and other countries. If you look at the businesses of GT Capital, I would say it's probably Toyota, but then again, as I've said, it does not import any from the US, nor does it export any vehicles to those destinations or countries. So generally, the impact is very minimal to the whole GT Capital lines of business.
Got this. Thank you, Sir Joey. So in terms of sales in 1Q25, as mentioned, very strong sales in the first quarter. What was the reason for the rise in margins?
The biggest contributor to margins really was just a larger number of Japan-sourced vehicles coming in. And as you can see from this table here, the Japan-sourced vehicles include the Hi-Ace, Land Cruiser, Alphard. These are usually the higher margin vehicles, right? So naturally, when you have higher margin vehicles that are basically coming in and representing a slightly larger percentage of total sales for a particular quarter, you're going to have some margin expansion. It also helps that basically the FX rate went in our favor in the first quarter, with the peso strengthening against the US dollar.
Thank you, Sir GB. How about in terms of the geopolitical tension right now, given the tariff topics all over the world and the geopolitical tensions now going in the Middle East and dragging war in Europe? How do you foresee this affecting the Philippine economy? And how does GTCAP plan to navigate this uncertain future?
As I mentioned earlier, we are very much aware of current geopolitical issues, especially what is happening in the Middle East. Nonetheless, we believe that in terms of, as I mentioned also, in terms of our supply chain, it's not really directly impacted. I mentioned that we are sourcing vehicles and parts from 3 countries. So that's a multi-sourcing. And that augurs well because we are not victims of concentration risk. But of course, what we do is to monitor closely the developments because any development that would impact, for example, the peso would be detrimental, obviously. But in terms of the fluctuation, we see in this chart that as long as it is within a narrow band, then TMP can, well, come out of it quite unscathed, no? Barring any significant or massive depreciation as what happened in the third quarter of 2022. Toyota should be able to maintain, if not improve a bit on the margins, depending on the model's mix, because there are other factors that affect margins and not solely determined by the foreign exchange. And so going back to the question, this would be one of the, shall we say, elements that we need to closely monitor given the current uncertainty in the geopolitical front. It's really the peso dollar.
Yeah, I think any armed conflict will have a negative impact to economies around the world. It's just a question of how exposed you are. And as Joey mentioned, I think for us, we're fortunate that we are not in the direct line of fire and that it won't have a direct impact on us. Any impacts, I guess, would be secondary to the extent that any armed conflict does have an impact on things like the exchange rate, fuel costs, which is a big component of inflation, right? Since we import most of our fuel requirements into this country, and to the extent that it affect other factors that we have to import as opposed to the produce locally.
Thank you for those answers to our dear speakers. Actually, alluding to the sensitivity on forex margins, one of our clients did ask, can you explain to us in layman's term how peso, USD, and yen affect GT capital margins?
To be clear, it's TMP margins that we are talking
Yeah.
about. And it is mainly a function of the imports mix. I mentioned the 3 sources of imports, and among the 3, it would be Indonesia and Thailand that would account for the lion's share. Now, every time we import from those 2 ASEAN countries, TMP is invoiced in the US dollar. Whereas if it imports from Japan, then it would be invoiced in yen. A very rough split would be about 60 to 65% from Indonesia, Thailand, about 20 to 25% from Japan, and the balance would be indigenous or locally sourced. So given that split, obviously it is the US dollar that has the greatest impact to the margins of TMP.
I hope that helps clarify that question. No? It wouldn't be any different from somebody who had to import their products. No? If they were importing it and paying it in US dollars, then you do have that exposure to the fluctuation of the exchange rate, especially if you cannot pass on that FX fluctuation directly to customers.
Again, just to reiterate, Toyota can manage any depreciation as long as it is not as massive as what happened in 2022, 2023. So as any importer would know, fluctuations and depreciations would be par for the course. So it is something that they are very much aware of, and they are able to handle that quite deftly.
Thank you, Sir Joey and Sir GB. Again, to our audience, please, if you have any questions, feel free to type in your questions in the chat box below. Another question on Toyota Motor Philippines, definitely in the spotlight right now. Why is Toyota Motor Philippines focusing on hybrid? Can you give color on why electric vehicles are also gaining popularity in the Philippines?
I think we touched on that already during the earlier part. So the reason that HEV is the one being pushed by TMP in the Philippines is because of its multi-path approach to electrification. Again, to reiterate, the lack of charging stations or the infrastructure necessary to support full battery electric vehicles is simply not present, especially if you go outside Metro Manila. There is what you call the range anxiety, and that has to be addressed before you can fully go into battery electric vehicles. And as again shown earlier, Toyota has been quite successful in its HEV offerings. These are very popular models which have been selling quite well. And in terms of Lexus, their sales is 100% HEV already. So that just proves that there is market acceptance. As a matter of fact, warm market acceptance of HEV. So this is what I'm referring to. When you look at Lexus, it has already surpassed way beyond its previous performance in terms of HEV unit sales. Toyota is getting there as well, as you can see in terms of absolute amounts. From 89 in 2019, it has sold as of first quarter this year close to 3,500 HEV units already.
You know, the availability of the charging infrastructure, I think, is a very big component with respect to going to full electric vehicles. The second is that when you take a look at a market like the Philippines, you know, there is that question, who's going to set up that charging infrastructure? To be, because I mean, if you're in an old building, you are going to have to rewire your old building to be able to set up a charging infrastructure. So who's going to pay for that charging infrastructure? And number two, is it going to be efficient enough to meet consumers' needs, right? In the absence of those, and in a market like the Philippines where cost is a very important component, hybrids is really the way to go, just simply because we don't have that charging infrastructure. And that's a primary reason why, at this stage, we believe that that hybrid electric vehicles are really the way to go. But as Joey pointed out, Toyota is one of the few, how do you say this, automotive manufacturers that has multiple products with multiple technologies that at the appropriate time, once charging becomes much more, I guess, convenient and ubiquitous for consumers. And maybe that's the time that we will shift more to pure electric vehicles. But at the moment, in a market like the Philippines, hybrid is really the way to go. You don't want to
Definitely.
run the risk. You don't want to run the risk of taking a trip to Baguio only to find out that you can't charge your vehicle there.
Yeah, thank you, Sir Joey and Sir GB. Definitely with the planned EDS expansion, the no coding scheme definitely helps out. So far, strong sales in the first quarter. Can you comment on the mid to long-term prospects on your Laguna plant? Are there plans to add models in the current roster, and how is adaptability in accommodating model changes?
Well, this is the Santa Rosa assembly plant of DMP, which is in an eco zone just outside the exit of the expressway. Currently, there are three models assembled in that particular plant, namely the Vios, the Innova, and quite recently the Tamarao. Now, its capacity, as you can see in this slide as well, is that 63,351 to be assembled for this year as compared to last year, which was about 61,000. And also that's about 6.3% year-on-year growth. So there is room for expansion in terms of capacity of the plant.
Thank you, Sir Joey. There was a news flow earlier, I think this quarter, and in terms of excise tax with pickups, right? What's your strategy for the removal of excise tax exemption for pickups? Is there some sort of front loading by consumers for pickups?
Well, GB?
Yeah, I haven't seen the latest sales figures to be able to comment on that specifically, and I don't think it would be appropriate for me to do that until we're actually ready to disclose our second quarter results. But having said that, if when you look at what happened in 2017 when excise taxes were going out, there was a sudden surge basically into looking at buying vehicles ahead of the excise tax being implemented. Is that going to happen for pickups? I think we'll wait to see over the next few weeks to see whether or not that's actually happening. No? It's just a fact of life that we're going to have to live with, and it affects everybody in the pickup market, not only us. Um, so I think different manufacturers are going to be all affected in one form, shape, or the other, unless you have a full on fleet of cars that basically are exempted from that excise tax.
Yeah. Thank you, Sir Joey and Sir GB. Another question in terms of policy, maybe to Miss Rain. So SMEPA was recently passed and it will take into effect on July 1. And what is the impact of SMEPA to GTCAP's businesses? Yeah.
One impact, as you mentioned already, it's on the excise tax on the pickups. Yeah. And on the other impact, along with the other companies, DST on the issuance of shares, DST on debt instruments, the usual. There's no, that doesn't separate GTCAP from the rest. So it's the same. It has the same impact as the other companies, except for the excise tax on the pickups. Um, I just wanted just to mention that for the EV and HEV pickups, they still continue to enjoy exemption from excise tax, just as in the case of BYD.
Thank you, Ms. Rain. Gearing off away from just one question with regards to Metrobank. So how does Metrobank react to the changes and the projections of the auto and property market and residential property in particular? And how do you see the appetite of Filipinos to residential property financing and automotive financing?
Let me try to tackle this now, and I will preface this by basically saying it wouldn't be appropriate me to speak directly on behalf of Metrobank, right? But I have to say that when you take a look at residential property financing, as you can see everywhere around the world, where the markets basically did well, right? Where the property markets did well, it was a question of affordability of financing and the availability of financing. And the big change that you see in the Philippine market in the last, I would say, 20 years is precisely that availability of 20-year financing for purchases of houses. And it will all boil down to affordability. So to the extent that the price of the property and the terms and conditions of loans extended will fit within a particular buyer's, how would you say, sweet spot, then yes, I think it will continue to grow. You can see that in this particular chart, that loan growth, particularly on the consumer loan side, right, is continuing to enjoy very, very strong growth. But again, as with other things, the other thing you have to be very careful about really is over leverage, right? And piling on debt that you cannot afford. That's when you start to run into problems, and that's where an institution like Metrobank, I guess their credit policies and the credit reviews have to kick in to be able to manage potential risks in the market. You will see from Metrobank's performance that we have very, very strong, I guess, very modest, very relatively low NPL ratio compared to other banks in the sector. So we'd like to think that we're doing things right. That's the only way that you can basically manage the risks in that particular segment. You get your credit right first and foremost. And number two is make sure that you have that your borrowers have enough can actually afford the financing that you're offering them.
Yes, thank you, Sir GB. And again, as a reminder to our clients and listeners, First MetroSec is a member of the Metrobank Group, and by policy, First MetroSec does not cover listed companies within the Metrobank Group, including but not limited to Metropolitan Bank and Trust, GT Capital Holdings Inc., and Philippine Savings Bank. Right. Again, thank you for the lovely questions to our dear listeners and to our speakers, of course. And we have a few minutes left to answer a few questions here. So, yeah, just to keep the lively session going. So, another question regarding TMP. Steep discounts have been reported for hybrid models. Can you give comments on TMP's overall pricing strategy, and are there any provisions to offer discounts to other models? I think some of our clients want to buy some cars here and they're looking towards those discounts.
If you are seeing a good discount being offered to you by your friendly dealer, I would encourage you to go ahead and take advantage of it. If what you're doing is looking for a new car, who's going to say no to basically a better price, right? But it wouldn't be appropriate for us to comment on the pricing strategy of Toyota, both historically and prospectively, because that would be delving into the area of highly sensitive, competitive information that we unfortunately are not in a position to share, right?
Maybe suffice it to say that, sorry, JB, maybe
Yeah.
suffice it to say that discounting is an industry tool. It's part of their promo. It's not something unusual. All brands do that in one way or the other.
Definitely. Thank you, Sir Libby and Sir Joey. Actually, in terms of circling back to your Toyota Motors hybridization strategy, one of our clients here is curious. Seems that electric vehicles, full electric vehicles, are still growing at a rapid pace despite the challenges you mentioned. What could be the reasons for this, and considering this, maybe Toyota can pivot to electric vehicles?
The low base, obviously, from practically zero, and the sales that they have been realizing in the recent months. So that accounts for the very steep growth rates of electric vehicles. Now, in terms of absolute amounts, clearly it doesn't really match those of internal combustion engines and even HEVs. Now, whether that trend will continue at such a fast clip remains to be seen. But again, we reiterate that Toyota is aware of that, and it's very much willing, if ever, to pivot. Just to reiterate what we said, that it has the capacity and the willingness to adjust its offerings as and when necessary.
And I think if you take a look at the chart that we've shown you here on the page now, full battery electric vehicles actually still account for a very small percentage of the total sale of electrified vehicles. And yes, while there is strong growth in electrified vehicles, it's really the hybrid electric vehicles and PHEVs that are basically coming and emerging as champions in this particular sector for the different reasons that I explained earlier. Just the absence of charging infrastructure, range anxiety, and the like. So will that change in the future? We will see. It depends on how we develop or how technology develops and changes in the future that will make it compelling to go for the full electric vehicle rather than a hybrid electric vehicle.
Thank you, Sir GB and Sir Joey. And In terms of market share, you did mention that TMP's total market share, but how about on a per market segment basis? Can you give us any color and the trends in terms of per segment, for example, subcompact, SUV, MPV?
That is one of the strengths of Toyota, that it is dominant in most of the segments that it is present in. And unlike other brands, its models mix is very, very popular across the board. You have other brands that sell only one or two models, very, very popular. But in terms of Toyota, you can see that whether it is a commercial vehicle, whether it's a passenger car, it's number one, which is why it has maintained its number one ranking in terms of what we call the Triple Crown Award. It has won that for decades, consecutive years, and that is, I think, the best evidence that it knows the segments that it launches models in, and it knows what the public, what the motoring public needs.
About this. Thank you, Sir Joey. Some of our clients are interested in Q2 performance. Can you give us any color on terms of guidance for maybe and for the rest of the year also on GTCAP's particular targets for the year?
We don't usually, or we don't give guidance, Kyle, so we beg the indulgence of the audience.
Thank you, Sir Joey, and hopefully the trend in first part continues. All right. So we do have a few more minutes left. I think that we can cater to at least 3 to 4 questions before we end the briefing that we have right now. And I think again, it's been what a lively Q&A session. So so again on TMP, I think this is really the main star of the show right now. What is TMP's strategy in terms of pricing compared to lower price EV in the hybrid space? Can you give us any color on that, sir?
I think that's we're not in a position to be able to comment on pricing strategies. That those are some things that we cannot unfortunately cannot share with you. But the intention is for TMP to be able to offer products that customers want, customers need at a price point that would make it attractive for them.
Thank you, Sir GB. So one question here regarding federal land. I understand that you did mention the focus right now is Cavite. How about for Nomura? Are there any plans to offer more launches in terms of partnership with Nomura?
I think the big portion of the assets in Cavite are actually held by F&G, which is Federal Nomura, and that's a joint venture with Nomura. You know already that we have the project in Ortigas. I think I would encourage people to check in on Nomura's F&G's website every so often, just to check out product launches. It wouldn't be appropriate for me to basically telegraph what is going to be launched in the future, right? Until they're ready to be launched. So I would have to decline from commenting too much on that. But my advice would be just please be on the lookout. If what you're looking for is a nice property, you can always reach out to F&G's sales force. You can reach out to them and ask what properties they have available that you can take advantage of and see whether it meets your particular requirements.
All right. Thank you, Sir GB. I think we can accommodate 2 more questions left. So one of our clients is asking, so I think I'm also seeing this everywhere. Now, Tamaraw is picking up. Can you give us any color on the performance of Tamaraw in the first quarter, maybe second quarter also, and how is the market receiving the Tamaraw?
Just very quickly, I think the Tamaraw basically is doing pretty well. It's doing okay. It's meeting its expected performance in the first quarter. You do have to remember that basically the actual production and rollout of models is ramping up. We'll probably see more models coming out throughout the rest of the year. I think I would just keep a close eye to the ground. We're happy with the performance, and we're looking for stronger performance for the rest of the year.
Bear in mind that this was just in the showrooms this year. So the development of the traction, the acceptance, the popularity is still a work in progress.
All right, thank you, Sir GB and Sir Joey. I think we have one last question left, or if any of our listeners want to follow up, we can accommodate one or two questions left here. But I think the last question from the chat box is: any chance TMP will become a public company?
No.
Yeah. Thank you for the short answer, Sir Joey. I think any last questions before we end the show today? I think I'll go for going once. I think we can end quite on time here, and definitely a lively Q&A session that we have here. All right, I think that's all for today, and thank you so much to our listeners and to our dear speakers. Yeah, thank you everyone for the lively discussion. And I know all of you will be bringing valuable knowledge from today's session. Thank you, Sir George, Sir Joey, and Miss Reina for the thorough and well-crafted presentation and the lively exchange during the Q&A. And finally, to help us improve the quality of our webinars, we kindly request for 2 minutes of your time to fill out our feedback form for this session with GT Capital. You may scan the QR code flashed on your screens, and thank you so much for your participation. This special briefing with GT Capital Holdings Inc. was made possible by First Metro Securities. And this has been your host, Cal Garcia, and in First Metro Securities, it's your future first. Right. Have a good Tuesday, everyone. And see you again in our next episode of Company in Focus.
Thank you.
Thank you, Kyle and team. Bye.